We are studying accrual accounting, and this module is about prepaid expenses. Yes, these prepaid expenses are also known as advance expense or prepaid expense or unexpired expense. We will learn that these prepaid expenses are accounted for in two ways. Either to work out through one ledger account method or to work out through two ledger account method. So in one ledger account method, we will be preparing only one ledger account which will be taking care of the expense figure as well as its reciprocal asset figure. So in this practice, what we will see that the rent is being paid in advance. So when we say in advance, it means that this we pay before the start of the reporting period. But the thing is that this rent payment in advance is made quarterly. So before start of the quarter. But our reporting period covers 12 months starting from 1st January X9 to 31st December X9. What does it mean? That these are the dates of payments which are falling in our year, and these are the months which are falling in our reporting period. Agreed? Either we have paid for it during the period or not, but based on belongingness, once again, this is what we have already learned. So what we see that total cash paid during the year 2000X9 is 40,000. It's worked out under this that what we have paid cash during the year is 40,000. This is what I have told you. These are the months. If you will work it out, you will work out like this, that we have paid this during the year. And then what we have already discussed, that under the technique or formula thing, that add opening advance 3,000. Opening advance is 1 month. How do we know? Yes, that opening advance is the amount that we paid in advance in the last year. So in the last year 2008, in the previous year, only 1 month, means January X9, is the month that belongs to our reporting period. So that was paid in advance in the previous year. And then closing advance is again 1 month. How do we know? Yes, in this year we have paid this January Y0 during the year, so it is closing advance. So what we do for this working thing, that we add opening advance and we less closing advance. We have already learned this formula, and this will give us 39,500, the expense figure. Let's see how it is worked out under one account method. So we prepare only one account, prepaid advance rent account, and we put payment of cash in the debit side, prepaid advance rent debit and cash credit, and its opening balance of rent paid in advance is also put in the debit side. Closing balance is placed in the credit side, and balancing figure will be taken to the profit loss. So when we have paid cash, debit prepaid account and credit cash account. Whenever we make payment, credit cash account. And for placing the balances, we do not do any accounting entry, remember. And for closing, yes, closing entry will be passed. Profit and loss account will be debited, and prepaid rent account will be credited with 39,500. So the important tip to remember in this one account method is that separate ledger account for expenses not maintained, and balancing figure is close to the profit loss account or income statement, and closing balance is presented in the balance sheet, obviously. Let's discuss the two account method. Two account method tells us that we will prepare two ledger accounts for working out this advance payment of expense, in which one account is the expense account and the second one would be its reciprocal asset account, which is the prepaid expense account. So the same example is with us, in which we know that this is the period in which we are making payment, and these are the months which are falling in our accounting period. Okay, let's see it's working, and we know very well, we are familiar with this working now. We have already discussed in the one account method that how to work out this expense figure. Let's move forward. So in this two account method, we have two ledger accounts with us. One is advanced ledger account, advanced rent ledger account, and the second one is rent expense account. We know very well that whenever we make payment of rent expense in cash, rent expense debit and cash credit. You can see this in this accounting entry, rent expense debit and cash credit with the amount of payment of cash during the year. Then for putting opening balance, there is no accounting entry. Just place this opening balance of rent advance in the debit side, since it is an asset nature of account. So asset nature of accounts, their opening balances are always placed in the debit side of the ledger account. So the next thing is that we have to transfer this opening balance into the rent expense. What we will do, we will take it from here and place it here. Okay, so for this, advanced rent account will be credited and rent expense account will be debited like this. Rent expense debit and advance rent account credit with this amount. And then the closing balance of 3,500. This is the balance of rent that we have paid in advance during the year for the next year. We will take it out from here. So closing rent advance will be taken out from here and will be put in the debit side, 3,500. Okay. So the balancing figure of rent expense account will go to profit and loss account, and this balance will be carried forward in the next period. For this profit loss, we will pass closing entry. This what you can see, that advanced rent debit and rent expense credit for the closing figure, and for the closing rent paid in advance balance. And this income statement is being debited for this rent expense that we have to close in the income statement. This is this balancing figure. If you see, let me write clearly, this is balancing figure. We are taking it into profit or loss. Well, so these are the accounting entries for this two account method thing. So what we learned in this module for two account method, that opening balances brought forward and closing balances carry forward are prepared in the prepaid account. These are not the items of expense account. Then expense account is closed in the income statement. Always remember. Okay. So thank you very much.